Live stream. I guess we're starting the live stream. Jessica, did I give you all some problems to look at in chapter 2?
Yes.
You remember the numbers of them?
I may have forgot to do them.
Oh, you did? Well, have you got those numbers down?
Chapter 2, number 47 and 49.
That sounds right.
That it? Okay, chapter 2, folks. Making a product. Materials, labor, and overhead. We decided that. Interest for making a product. I think that was one of your problems. Maybe journal entries. And then, of course, predetermined factory overhead rate. So your big thing in this chapter was the 3 items that make a product. But your 3 end results in this chapter that you got to know for the first test is a manufacturer statement, journal entries, and a predetermined overhead rate. That's the 3 concepts I want you to gain. Now, we haven't practiced enough manufacturer statements, or journal entries, or predetermined overhead rates, but we have a little. We've hit on it. So let me see if I can find. I haven't found these this semester or looked for them, but down here somewhere, here they are. Cost solutions. I thought now you all know the reason I cut cost accounting short every day. That's my lunch break too. Mr. Ivel knows it because he gave me 3 classes in a row. And 15-minute breaks is okay. I could make it with him. But with just 4 or 5 students, I think we can do everything in 2 hours a week. That's an hour on Tuesday and an hour on Thursday. We usually get out by 12. But intermediate, I don't think you all got 10 minutes of lecture yesterday, did you?
We didn't even like 2.
All right. But Mr. Imel, though, he's a hard worker in his job. He's our head chef. Jessica tried some of his beet soup yesterday. Do you know what one of the work studies Robert said? Robert's in this class, but Robert is last. You know what Robert said about that soup? It is too pink.
The pink did throw me off.
What?
The pink did throw me off a little bit.
It did me when I started dipping it out. But
Yeah.
if you put beets in anything, it's going to get pink. But his main object there was beets and cabbage. That's in the Russian soup. And he put carrots and onions in it. And Polish sausage. It was some kind of pork. You're supposed to put some kind of pork in that Russian soup. So I guess Polish sausage is one good, but I don't know what other kind of pork you put in it unless it be something like a pork roast, chop up, put in it. But anyway, some of these other countries, it's different. Even the bathroom facilities are different. Steering wheels on the other side of the car. Their bathrooms is just hose and floors. No toilets, just hose and floors. In Russia, they say to women, if you go down on Market Street and if this Russian gal wanted to try on a blouse, right there in public, she just jerk off her old blouse and try on a blouse if she's going to buy it. So, different cultures are different. West Virginia has their own culture, don't they? Okay, what goes on a manufacturing statement? What do you have to find first?
Your beginning inventory.
Of what? That's
Raw
given to you.
materials.
Alright, you got beginning inventory, raw materials. What do you do next?
It's your, what you purchase for your inventory.
Oh, you see, materials inventory is just like, let me, back in periodic accounting and principles, and I didn't cover that much this year, I just covered perpetual. But back on periodic, to find cost of goods sold, you had to take beginning inventory
Plus purchases.
plus purchases, gave you
Materials.
goods available for sale, minus ending inventory, gave you cost of goods sold. Now, you may still have to use this on your income statement, but instead of purchases, it's going to be manufacturing cost. But now, I use this same thing to do materials on a manufacturer statement. Beginning inventory plus purchases. As Jessica said, that gives you materials available, minus ending materials inventory gives you materials used. All right, so you need to know this format. So when we find materials used, we add what to that? What do we add to materials on a manufacturer statement? It's usually a one-liner. What is it?
Direct labor.
Labor. Now it can be a one-liner or it can be a lot of lines. It's overhead. It could be fixed overhead and variable overhead. Now when you add those three together, you actually get manufacturing cost. And that goes over here if you have no beginning or ending work in process. But if we have work in process, beginning we add and subtract ending, and then we get our manufacturing cost of goods manufactured, and we transfer it over here. So that is a manufacturer statement. Now, journal entries you're making for materials and labor and overhead. Now, if we were doing a flow chart, crude flow chart, that would flow over to work in process. And that would flow over to cost. No, that flows over, sorry, to finished goods. Now that flows down to cost of goods sold. And you can take this flow of goods and make journal entries. You buy materials, you've got labor, you pay for overhead. We put materials in the work in process by debiting work in process. We put labor in work in process by debiting work in process. We credit materials inventory, we credit wages payable. Now overhead, we debit overhead for our actual overhead. And we credit accumulated depreciation. We debit overhead and we credit rent payable. Now if we want to wait to the end of the period and use that actual overhead, we debit work in process and credit factor overhead to give you zero balance. But most of the time we use a predetermined rate and we debit work in process and credit factory overhead. And then we'll balance out the overhead account at the end of the period. So basically that's what we've got in chapter 2. Journal entries, overhead rate, and a manufacturer statement. So William said we had 47 and 49 today. And I forget which one is which.
47 is the journal entries.
You know, this chapter, that gives me the option to use a pen, but will not let me choose a pen. So I can't write on it. I don't think they elaborate enough in the chapter on prime and conversion cost. You got to know those difference. That is direct materials and direct labor in it. That's the prime cost to build a product. Conversion cost is direct labor and overhead. You take materials and you convert it with labor and overhead into a product. So know those two costs. I don't remember pointing those out in the book. All right. Now, William said this was homework. All right. And this is what you should have practiced. You got a one-liner here, materials used, or if you had to take beginning plus purchases, you could have. You got a one-liner labor. But here you've got indirect labor, insurance, utilities, depreciation, and rent. And then, of course, total cost to account for was $1,045,000. That may be your total cost if you don't have beginning working process. But here we did have an ending working process. I don't guess we had a beginning. So our cost of goods manufactured, it goes over to the income statement, was $1,029,750. And up here, I don't know what A part was, so let's look at that problem in your text, number 47.
It was compute the cost of goods sold.
The what?
It just says compute the cost of goods
All right.
sold.
I'll find it here someday. All right, it says, yeah, compute the cost of goods sold. But here, what do you have to start with? Did it give you, before you can find cost of goods sold, do you have to find manufacturing costs first? Or they give you something else to go on?
They gave you something else.
All right. Whoa. Get some of these equipments out of the way. Okay, you had direct materials purchased, direct materials issued, direct labor payroll, indirect labor payroll, prepaid insurance, prepaid factory utility, depreciation, factory rent, sales, all on account $1,431,000. All right, we've got $1,431,000. Yes, sales. But how did we get the 65% cost of goods sold is 65%?
It gives you the company's gross profit rate was 35% of all
Right.
sales.
If your gross profit is 35, the rest is cost of goods sold, isn't it? That sales is 100%. And I can't mark on this thing. Sales is 100%. Cost of goods sold is 65%. Gross profit is 35%. Okay, so that takes care of part one. Part two, we see that. Now, part C, what is finished goods inventory at December 31st? Did we know the beginning finished goods?
It didn't have one, so you assume 0.
We didn't have a beginning, be 0. All right. Now, what is the finished goods inventory? What do we have to go on? All right, you didn't have a beginning, it says 0, right? plus cost of goods manufactured 1,029,50. Now where do we get to 950,000?
Cost of goods sold.
Right here. Okay. And D part. If net income was 125,000, what was total selling and administrative? Well, did we get gross profit? If this is cost of goods sold, what was sales? Subtract cost of goods sold from sales and get gross profit. Is that about 500 and something thousand? What is that?
100,000, 150.
All right. Now, if you then subtract from that, or we have to subtract from it, net income, subtract 125. All right, folks, that leaves you selling and administrative of 375. Now, in C part, E part, prepared journal entries to record the flow. Now, here's a set of journal entries, folks, here. Now, say if you didn't have managerial, and William didn't. Jessica and Alexander's okay on these entries, I think. But you and William should have done the homework. All of you should. All right. Debit raw materials, credit accounts payable for those purchases. Debit work in process and credit raw materials for what we sent to the factory. Debit work in process and credit wages payable for the direct labor. I think it's what direct labor was. Then debit to factory overhead and credit wages payable for the indirect labor. And then debit factory overhead control and credit prepaid insurance. Debit factory overhead control and credit cash for the utilities or utilities payable. Debit factory overhead control and credit accumulated depreciation. All right, we paid rent with cash. Debit factory overhead control. All right, now where did this entry come from? The actual factory overhead was actual, which we could hardly ever get. So we debit work in process and credit factory overhead control. You had to keep a T account for factory overhead. Then we know what we sent to finished goods. We know what the administrative and selling expenses were. We know what cost of goods sold and finished goods was for those that we sold. That is 65% of sales, isn't it? All right. And then sales, we debit accounts receivable and credit sales. And there should be another entry right here, debit cost of goods sold and credit finished goods. So these two entries go together. All right. Now that problem was a good problem for the chapter. It was the manufacturer statement plus it was journal entries. Now before we get to number 47, all right, before we get to number 49, let's go back to number 44. I want to scan through those with you real quick. Page, problem 44. Okay. Now, you have an e-book and a book. You're doing taxes.
I forgot what's
And you have a textbook. All right? And you have a textbook. What's yours? Have you got one in here?
It's still in the way.
How about yours, Willie? Still on the way. All right. All right. From what you all seen this morning, And since you don't have a book, I'm gonna give you 5 minutes to jot down some entries here. Now you're gonna see the problem. Maybe you're gonna see the problem. Too much.
Hey, look, can I borrow some?
Okay, guys, I want all of you, guys and Jessica.
Not all that's daughter.
I said guys and Jessica. I hate to say lady. Kidding there, Jessica.
I was so close.
All right, these are journal entries for what kind of companies? The foreign transactions were incurred by this industries.
I'd assume a manufacturer.
Oh, this is a manufacturing also, isn't it? Okay, go ahead and jot down these entries. We just need to practice. Try to remember the entries we just went over. Can't do that, can you say? Can't read your text and walk at the same time. What?
Slightly confused as number 5. So I'm not completely sure whether
I can read it.
is that different than or is it assuming interest rate? Is that different than?
Credit salary payable.
Because I was like, would it be administrative?
No. When it says supervisor, it don't specify.
Just put it
It's
over.
administrative would be directors, vice presidents,
Yeah.
presidents. Let's take our time, guys, and let's everybody write down these entries. Especially if you didn't have manager on, you don't have a book yet, or cost. Where'd you order yours from, say?
I got mine from Check.
They did say it's on the way.
Yes.
How about, where'd you get yours
I
with?
got mine from Amazon. And, it's on.
Yeah, they usually promise you. What does Amazon not have? Can you get a car from Amazon? I don't know, but they've got everything.
You can get a refrigerator from Amazon.
They got everything. All right, let's look at these and talk about them real slow. Now, we issued 800,000 of direct materials, to production. All right, now say, from what you've seen, what will you debit for that 800?
800,000 work in process inventory,
Right?
and you credit raw materials inventory.
Right. You're transferring it from one place to another. Where it's going to is a debit, and where it's coming from is a credit. It's coming from raw materials in the warehouse. All right, we paid 40,000 hours of direct labor at $18 an hour. Don't know why they didn't just multiply that out for you, but that multiplies out to be how much?
720.
720,000. What entry, William, would you put on that one?
I put debit work in progress and credit wages.
Wages payable will be fine. Yeah, debit work in process. Now, work in progress is the same thing. Some books use progress, some use process. All right. Accrued 15,500 hours of indirect labor at 15, Jessica.
Debit factory overhead and credit wages payable.
Now, that went into factory overhead and credit wages payable. Now, I can't draw on this, but you should draw yourself a T account right now and put in that your indirect labor. How much? Draw yourself a T account and debit, put over it factory overhead. Now debit in that T account, how much? 232,500. Okay. Received 102,100 recorded of depreciation. What do we debit? All right. And what do we credit? All right. Let's in that T account put that $102,100 as a debit. All right. Now, Alexander, we accrued 32,800 as supervisor salaries.
Debit factory overhead and credit wages payable.
Exactly.
Salaries payable, whatever you call it.
Yeah, okay, now put the 32,800 in your T account, factory overhead. You're going to have to add these in a minute. Now, we completed, no, wait a minute. We issued 25,400 of indirect materials to production. Now, what was your debit there?
Work in process,
Work in process and credit,
supplies inventory. Supplies inventory.
supplies inventory. And we issued 25,400 of indirect materials.
That's where it's said to put it.
What?
That's just where it's said to put it.
I know, but
Yeah.
what I'm thinking though, we got to put those materials in the work in process. Yes, debit. And we've got to credit the materials inventory. They come out of real materials inventory, and sometimes you have a separate supplies inventory. But how does that get into factory overhead? Because it is going to be factory overhead, isn't it?
Would there be an adjusting entry later?
Maybe. Now let's see what it says. Prepare entry, well no wait a minute, issued, completed goods costing 1,749,300 and transferred them to finished goods. Now that entry is going to be what? Debit what? Finished goods and credit what?
Work in process.
Alright? There's two things here that puzzle me, I guess. They're not asking you to transfer factory overhead in unless it's part 2 here. And what do you do with that? Indirect materials. We made the right entry. Okay. Now, if work in process inventory had a beginning balance of 18.9 and an ending balance of 59, what amount of factory overhead was included in work in process during January 13th? Now, what have we got to go on so far? We completed goods costing how much? 1 million what?
1,749,300.
All right. Now, work in process had a beginning of 18.9 and a balance of 59. What amount of manufacturing overhead was included? All right. Let me bring up something else here to try to. Jessica, you and Alexander have a book, so I'm going to need you here. This thing's not even going to lead me anywhere to back out of this.
Press escape.
All right. Do I have an X or anything up here?
Press escape.
Press escape. I've never used that escape key. I know it's here.
Top left.
ESC.
Yeah, very left.
There you go.
Okay. Now I hope you all remember those amounts, because I don't. Now I've got a book here though, and what is that beginning work in process?
18,900.
And ending work in process?
59,600.
How much?
59,600.
Now how much goods did we send to finished goods?
1,749,300.
Now we sent that out to finished goods? All right. All right, I want you to add these two together. That'd be work in process you had available. I want you to add these and subtract the beginning. Is that going to give me 1 million? What?
790,000.
90? Even?
Yep.
Oh, that 9 and 6 and 3 canceled themselves out there to zero somehow. Now that's how much we had in finished goods, right? And then we sent out this much, right? And it left this much, is that right? We had this much, we sent out this much, it left this much. Now, what is this one amount made up of? It's made up of materials, labor, and overhead, right? Now, how much was materials? How much materials did we put in there? Every time you debit work in process, I want materials number here or labor number here. How much materials would debit work in process and credit materials for how much? First entry,
800,000.
and then we debit work in process and we credit materials for supplies, didn't we?
We did direct labor.
We did direct labor first. How much?
720,000.
700 what?
20,000.
40?
20.
20? Well, 3 ingredients gives us this number. So what is factory overhead?
$270,000.
200 what?
270,000.
Now, I don't know if that will match with your T account of factory overhead or not. Does not match.
Does not.
All right? I may have got lost in my calculations here somewhere, but just in case, if I missed it, I'll take the blame. No problem. I will bring up the solution. And that's number 40 what?
44.
So let's look at the entries first to clarify them. We were okay on A, 1 and 2 was cash or salaries payable. We were okay on 3. All right, we were okay on 4. Okay on 5. Whoa, 5. Oh, we put it there, didn't we? Did we put it in overhead? Yeah. 6. Did we put that in working process or
Yeah.
manufactured overhead?
Put in working process.
Should have been manufactured overhead. How did it read it that we put it in working process?
It said transferred indirect materials into
They said into working process, didn't they?
to production.
All right. That's sort of tricky. But that's why this will get bothering me. Where's the factory overhead at? How are we going to put those in the factory overhead? Well, that's where we should have put them. And then finished goods, we have no problem there. Now, did we have a problem here? Did we get 10808?
Yeah.
We took the beginning, we did materials and labor, and the ending, we had to plug in, I guess. Did we get to 1808? What did we get for part B? What answer? I know we put it down somewhere. What is it?
We didn't do the
We,
statement.
we didn't take it on out.
No, we didn't do the statement.
All right. Goods completed. I thought we found this figure somewhere.
Yeah, when we added the finished goods out with the end.
Yeah.
I did it a different way than
Yeah,
found
you
it,
did
didn't
it
it?
a
But
different
it's
way.
17493.
Yeah.
All right. That was B part. B part, am I missing something? What was it asking for? The work in process had to begin inventory, blah, blah, and ended, blah, blah. What amount of overhead was included? Now, here is your answer, which is 270. Did we get 270?
Yeah.
But now, if you added up the actual factory overhead, Jessica, now put that supplies in there,
It's 329.8.
329.80, and here they're saying 270. So they don't have this problem as precise as they should. Those two should have matched. Or they should have told us they were using a predetermined factory overhead rate. Okay, journal entries. Now there's one other journal entry problem I want us to look at. Now I started to look at that with you yesterday. And I thought it was a service business. I'm more interested in journal entries for manufacturing business. So we'll skip that service business for the time being. Okay, now say that you and William have seen how to plug in these figures. I want you to look at a real plug-in problem. Now this is a plug-in problem. All right. All right, here's case 1, 2, and 3. Now,
Take 2 steps this way.
all right,
Nice.
okay. All right, I want you to plug in direct labor, Indian worker process, beginning. See if you can take case A and plug in A, B, C, D, E, F. See what you can plug in about 5 minutes. Well, that was a homework problem. I keep forgetting, Sage. I'll try to stay over this way.
It's fine.
Plug in any of them you can. If you remember a manufacturer statement, an income statement.
Hey, can you take 2 steps this way?
I'll do that, Sage, in a minute. I'm gonna have to move you over on that side. Alright, Jessica, do you have aid yet?
2,500,
And tell us how you got it.
because, your prime cost is just direct materials and direct labor added. So you
Alright, you took materials
subtract
and
from
labor,
prime
wait a minute. Your prime cost, that's very good. Prime cost,
is your materials.
and I mentioned that to you at the beginning of the class, is your materials and labor. So if your materials are 1,200, you subtracted that from 37. Very good. You remember prime cost. Very good. Alright? Now, manufacturing overhead, B part. Alexander, can you be as good as Jessica and get B part about the same way Jessica got A part?
No.
You can do it about the same way, can't you? Alright, now,
Just take conversion
you
costs.
take conversion costs of 4,800 and take out direct labor of how much?
25,
And that leaves you
23.
25 and 38? Wait a minute.
23,
23.
25.
48. That leaves you 23. So your answer B part is 23. Easier than what it seemed,
C is where I got stuck.
because you had conversion costs and you had prime costs given. Now, C, ending work in process inventory.
Yeah, I'm stuck.
Well, we're gonna have something to go on, don't we? Ending work in process inventory. Alright? First off, we know materials, 1,200, right? Labor, how much?
25,
And overhead, how much?
23.
Add those together, and you've got manufacturing costs.
6.
Now, do you have a beginning work in process? That's what it says you do,
Yeah.
500. Now add those four items together. Materials, labor, and overhead, beginning work in process.
65.
That gives you total cost to be accounted for. Now,
Subtract goods manufactured.
alright, which one, William?
Would you subtract goods manufactured?
The cost of goods.
No, wait a minute, I don't wanna do that yet. May have to. Not cost of goods sold.
Because you have to use that for the
You see, man, oh, wait a minute, you're right, William. Take cost of goods manufactured, 6,200, and subtract that
300.
to get 300.
Yeah.
You subtract those other four costs from it. Okay, we'll look at them in a minute to make sure. Alright? Now see if you flip in D part. You wouldn't have to do one like this on test, but it makes you think. Now you can easily fill in F. What's the answer to F there, real quick, folks?
1,300.
How much?
Is it 1,300?
Be 13, it'd be 22 from 35. Because we know that gross profit, subtract operating expenses, gives you net income. It's easy to plug in F. But have we plugged in E yet? Cost of goods sold. We gotta find beginning and finished goods first, don't we? Jessica, did you find begin? All right, remember on a income statement, probably lost my pencil. No, I need that computer pencil. I'll probably stuck in my pocket. Here we go. It has to be this one, will you? Something about it lets me erase. All right, we want to find beginning finished goods. Now, when you do this, beginning finished goods plus cost of goods manufactured gives you goods available for sale minus ending finished goods gives you cost of goods sold. Now, if we wanted to plug in some of these numbers, now Jessica, you and Alexander's only two that see a book. What is ending finished goods inventory?
1,200.
Just 1,200? All right.
And cost of goods manufactured is 62.
This is cost of goods manufactured. How much?
6,200.
Now we've got to have something else to plug in. Do we have cost of goods sold? I thought we could look up there and, no, we were looking at gross profit,
And cost of goods manufactured.
sales, gross profit. Do we have beginning inventory? We got to have beginning or ending. We got ending. We got this one. We got to have one more number or we can't do this. There's got to be goods available or cost of goods sold or beginning inventory. Okay, Jess, it's there. We're just not seeing it.
Would the cost of goods sold be sales minus profit?
Sure it would.
Alright, then it's 5,800.
I knew one of them had to be there somewhere. All right, you had sales. Sure did, 93. You had gross profit at 35. 93 minus 35.
Is 58.
Now, if we got three of the variables, can't we plug in everything else? Now, can't we plug in everything else? It didn't ask for cost of goods sold, but cost of goods sold would be, what, 46? Now we can keep going, can't we? All right.
Well, cost of goods sold
Wait a
is
minute
the-
now. What was this goods available here?
Yeah.
How much was this?
Not 58.
Hold
Huh?
on. 58 was supposed to be the cost of goods sold.
No, wait a minute. Wait, something's wrong here.
Cost of goods sold is 58.
Yeah.
Is this 58?
Yeah.
Yes.
Now, if you add these two together, goods available would have to be, is that 7,000? All right, if we added 62 to something to get 7, that something would have to be what? See how you can plug in? But now let's make sure we plugged them in right. I think we did. Make sure we plug them all in. Okay. Look at your dark black. They all look okay, don't they? they give you ideas down through how to plug them in. I want you to work one more problem and try to read chapter 3 before Tuesday.